Have you ever wondered how government will charge your profit from assets such as crypto, stock, and every other form of asset which you dispose of? Let's break it down real quick. The big question is, what is capital gains tax? Capital gains tax is a 10% levy imposed by the government on the profit you realize when you dispose of or sell off an asset such as properties, stock, and other crypto form of asset. No matter how long you've held an asset, either for a long period or a short period of time, whenever the acquisition amount, which is the amount of money spent in buying that asset, is less than the amount of money you spent in selling that asset, the profit, which is the earnings that is made from selling or disposing that asset, either stock or properties, is prone to what we call capital gains tax. All individuals or companies that dispose their assets or stocks are liable to pay capital gains tax, but there are exemptions. If your total or annual sales of your assets or your disposable assets, either stocks or property or crypto, is less than or equal to 150 million naira, you'll be exempted from stock. Or if the gain, which is the actual profit you gain from selling your stock or your assets per year, is less than or equal to 10 million naira, you can also be exempted. But if your sales is greater than 150 million and your profit for the year is greater than 10 million naira, you are liable to pay capital gains tax. Okay, let's take for instance, this person acquired an asset worth 500,000 naira and sold it worth 800,000 naira. The amount which was the profit or earnings from that transaction was 300,000 naira on the disposal of that asset or stock, as the case may be. Then 10% of the gain, which was 300,000 naira, was seen as 30,000 naira, which was the capital gains tax for that transaction. So basically, there are other expenses under disposal of assets that can be deducted from the capital gains tax, which is brokerage cost, the cost you pay to either the stockbroker or the agents that helps you to dispose your asset or sell off your asset. We also have legal costs if you have to do with assets like land that has to involve legal activities like a lawyer. You pay for professional fees and the rest. Maybe some advertising costs, the cost you made in order to advertise that product, are also meant to be deducted. And if there's any interest on that asset, or maybe loan on that asset when you acquired it and you are now going to dispose it off, you can deduct it. Maybe the loan, you have not settled it, and as a disposal you intend to settle the loan on acquisition of that asset. While you are disposing it, you can deduct it from the capital gains tax. Kindly note that those evidences can be honored or allowable when there is documentary evidence of those expenses relating to the disposal of that particular asset. Do well to follow for more tips. See you in my next video.